Hello everyone, welcome back to the channel here, Matt with Green Bar Trading. Welcome back to another weekly watch list video where we're going to go over everything you need to know for the week ahead. Before I get into it, please hit that like button, and if you are new, consider subscribing to the channel. So as you can see right here, this is the earnings for the week. Now we have a very heavy retail earnings week. A lot of big companies in the retail sector are going to be, going over their earnings and the guidance for the coming quarter, the coming year. Now that's going to be very important. All right. Where these companies see the consumer, the customer, and what they're spending their money on, and where they see that going in the coming, few months. Now, with all this recession talk that you hear, it's going to be important, to listen to what these CEOs have to say as far as the customer and what they're seeing with that. All right, so that's your earnings right there. All right, so now let's get into the economic calendar for the coming week. This is something that we don't want to overlook. The economic calendar has been very important this year. The market has traded really like I've never seen it before on just about every economic data that comes out. And that's because you hear a lot of recession talk. The Fed is really doing a lot as far as raising interest rates. So there's just a lot that goes on when these reports come out. There's a lot of algorithms trading. So that's why we go over it. And this week, what I'm seeing is those retail sales, right? So we have the earnings from the retail sector. We're going to have the retail sales. And we have a ton of Fed speakers this week. All right. So I would just suggest knowing when they talk, right? Knowing when they talk, the market might move on what they say, and just being aware of that. All right, so that's this week. A lot of Fed speakers, and then that retail sales on Tuesday, and of course the jobless claims on Thursday. Those are going to be the most market moving events that I see for the coming week. So that's your economic calendar right there. Taking a quick look at the bond yields, it's just crazy to me to see these yields on the short end of the Treasury curve. It's just crazy right here. 5.68% on a 1-month Treasury. Now, a lot of this is because of the debt ceiling and the thoughts that we might default as an entire country. They are probably going to do their best. Now, anything can happen, but I really doubt that they will not come to some kind of agreement before that ends up happening. But right now, you're having the longer dated treasuries, and the yield curve is so inverted right now. If we don't see a recession, this would be one of the very few times that this has happened where you don't get a recession. So that's what the Treasury bonds are doing right there. Going over to something that I, show everybody pretty much every weekly watch list video, especially lately, are those holdings for the QQQ. We have seen this ETF, which is the NASDAQ. We have seen it holding up so much better just about than any other index. And that is because of this one simple thing. You have Microsoft, Apple, Amazon, Nvidia, Google, Meta, and Tesla making up half of the entire QQQ. Percent of the fund, right here. These are the weightings for the QQQ. Those stocks are making up half of the entire NASDAQ, which is just incredible. And these have been outperforming. They are extremely overpriced at the moment. And if anything were to happen to these stocks, you would see the entire market come down. All right, that's the QQQ. Now, something interesting, and why the S&P 500 is not outperforming at such a level as the QQQ is because those same stocks are only making up 20% of the SPY, which is the ETF for the S&P 500. So 20% for those stocks on the SPY, 50% on those stocks for the QQQ. All right. So if you're going to short anything, I would look at that because right now the Qs are holding up really good because of those big mega tech companies. It's not really wise to bet against such strength. Now, you can wait until some cracks happen and then do it. But as of right now, the SPY, the S&P 500, is telling us a much different story. All right. A lot of companies are not doing that well in the SPY. You have Ford making 52-week lows. You have US Steel at 52-week lows. You have a lot of those economically sensitive companies that are not doing well. While these 7 stocks, these tech stocks, are pretty much carrying the entire market. All right. So that's that right there. Now getting into our compass, the SPY. All right. We have not moved anywhere. We are just trading in a range. It is just very boring. Okay. This is very boring stuff here where all of the volume for this year has basically been where we are right now, right? Between this 405 to this 415, there really is not much range. There definitely is not much of a trend that you can take. We have seen a lot of dip buying, right? So if a market is weak during the day, we have seen buyers stepping in the middle of the day and carrying the market back up. A lot of times we'll open and close at the same spot, but we've dipped and then that dip gets bought and we go back up. This is where we are at right now. So, what do I see? I see a lot of struggle up here. Now, not just struggle, but really buyers that are exhausted. I don't see much upside as far as the market goes. Now, if too many people feel the same way, like I do, then you can possibly get some more upside. It's more of a contrarian type of bet. If so many people think the market is going to drop, odds are it won't. So we just have to wait here. This is what, I'm seeing. I'm seeing obviously a lot of resistance up here. You can see this one day, this candle here, it was looking good, right? During the day, ended up selling off. And then you had 3 days of a pullback. And then we're right back into that same range again. So this is the market we're in right now. It's just a market that is balanced. But by balanced, it means you have those 7 stocks and then you have the rest of the market, which is weak. Those 7 stocks are strong and it's keeping us right here. So that's it. This is the SPY right here. Now on the weekly chart, we can take a look at that. The volume will be, a lot of it is over us. That happened back in 2022, 2021, 2020. And, there's just a lot of overhead supply here. Now, this is the weekly candle. I like to look at the weekly candle to see where we're at. And I'll show you the QQQ, which actually was on the verge of having a really, really weak weekly candle. But because we saw that buying at the end of the day on Friday, it changed everything. So right here, where are we at? Not the strongest looking weekly candle. I could definitely see the market pulling back. The timing, that is just the hardest part about trying to predict where the market is going to go. But this definitely looks very weak. It's definitely at that resistance. You have that double top on the year. So right now, I wouldn't be somebody that is putting all my money into the SPY thinking that we're going to go back to, highs where we were, at least right now. So that's what we're going to do here, just waiting and seeing on the SPY. If we take a look at the QQQ, I'll show you that weekly candle that I'm talking about. And I'm actually going to take off this volume so we can see the chart a little bit better. There we go. So this weekly candle right here on Friday, right? On Friday, this candle was looking like a huge topping tail red candle with that spike up, and we were trading back down here. The market ended up rallying, those dip buyers came in, and that's the weekly candle that we're at right now. This looks much more bullish than the SPY. We broke out of this range. If we look at this on the daily chart, you can see here, we were range bound coming into last weekly watch list video, broke out, retested that breakout, and then saw the buyers step in. So very bullish chart here on the QQQ. Extremely bullish. I would not want to short something that looks like this, even though I understand what's going on under the surface with those 7 stocks. I just don't feel comfortable right now holding a short on the Qs until we really see some more of a breakdown here. And we could just go in and take a look at those top stocks. You can see Apple is at highs for the year. It is struggling here. This is definitely a stock I'm going to be watching with this 171 support and this very clear resistance up here at the 174 area. If this rolls over, right, then you can see that the rest of the market is going to have trouble. So far, it's been holding up on this 20 EMA, which is a huge momentum indicator on the daily chart. If we look at Microsoft, same thing. This broke out, retested, and then is still, up here at highs for the year. Extremely overbought at the moment, but this is where we're at. So until anything happens, this will continue to hold up the market. Meta, same thing. This is something that we were taking a look at, the 3-day rule, waiting, seeing the rolling over. Just like what happened during the last earnings, it rolls over, and then it usually finds support at that 20 EMA. Now, if we take a look, something I want to show you guys with the volume, I'm going to show you what a gap looks like in the volume, which, a lot of times we'll trade those gap fills, right? So if there's a gap to fill and there's a lack of volume, a lot of times the market will come back down and retest that support. So on Meta, that would be, coming back down here to that 217, 220, and then you have this big volume bar here at about 213. That's what a gap fill looks like. So you have, that gap up after earnings, and then you have this really big vacuum here where there's no support. All right. So that's what that looks like on those gap fills. Just wanted to quickly show you guys that. All right, now on AMD, one of our picks from last week, and I'll go into our Tesla pick too, that worked out well. This had a great move to 100. This is what we were calling. We were calling that move to that 100 area. That was highs back here, and we had that nice bounce. So a lot of times, the way that traders trade, when you're looking for a move, odds are it's going to try to test that previous area where we saw the pullback. And that's exactly what happened. And that's why I called out 100 as a good price target for AMD. We saw it hit that, and then it pulled back. This is textbook trading for a stock. All right, so that's AMD. Now looking at Tesla, Tesla had that gap fill. This is something that we called out a couple of weeks ago. Last week, a very nice gap fill. Perfect. Really just about to the penny right here. And this is what I'm talking about. Gap down, and then it tries to come back, and it comes back and fills the gap. And that happened on Friday. So this is looking extremely weak to me, and I'll tell you why. We opened up here at that gap fill and just saw nothing but selling during the day Friday on heavy volume. That's usually not a great sign. Now, we are at that support right here. So I think we're just going to have to wait and see on this one. This did break out, and it is retesting that breakout area. So if Tesla was going to continue to go higher and at least get to this trend line, it's got some work to do, because that is a very weak candle right here. All right. So anyway, I hope that you guys have a great weekend. All the mothers out there, happy Mother's Day. I'm going to spend some time with my family right now. And, don't forget, hit the thumbs up for the video, and I'll see you guys on the next one. Take care.